Hello, today is the 4th of January 2025. As always, we'll begin with our disclaimer. We'll go over our calls and then make our predictions. This is my trading plan for Monday. Monday is January 6th, 2025. Please remember, my calls can be wrong. Trade at your own risk. On Friday, we looked for the pattern with the early low, which we got, and Monday should also have the early low. We said we had pretty reliable patterns that unless we gap smartly, we should see lower prices and higher prices. We did gap smartly. That took the lower prices off the table, but we got the higher ones. This is a review of what we had to say. Significant gap. These are next week's patterns. We rallied to a strong resistance area. If you look at the blue line, you'll see how that closed the gap, and that's resistance. We had 61.8% retrace of this drop right there. That's that purple line. And we get to cross a 59, 39, 58 target from December 30th off the list. So we're now down to only 5 targets from last year, which didn't print. We had 10 targets from 23, which didn't print. But if you look, 2 of them happened the same day. Here was 3 within a week of each other. Here were 3 within 2 weeks of each other. So we had a few clusters, but for the most part, these numbers print. And that makes it quite likely we're going to see the new target of 59.29.21 print on Monday, provided we don't gap up smartly. MEJT said this is a false move, we're going to retrace. This is a daily chart. Here's your 50-day moving average. We have resistance from the 50-day moving average. Resistance from the MEJT target, resistance from the Fibonacci retrace, resistance from the gap fill. So we have strong resistance. If we're going to keep going up, we should gap over it. And if we don't, probably resistance is going to hold. Now, one of my trading rules is that the first 2 days of January tend to be a counter trend move. Doesn't happen every time, but there's an old aphorism that the action of the first week of trading tells you how January is going to go, and the action of January tells you how the whole year is going to go. Well, if you include January's action, that's pretty good. So if January is a down month, the chances the year is going to be a down year are pretty good. But if you exclude January's action and just look at the next 11 months, if January is down, it doesn't mean the next 11 months have to be down. It just, if you exclude what's already happened in the first month, for the rest of the year, it's kind of a lukewarm predictor. Those are all pretty standard stuff. My own stuff says the first 2 days action tends to be reversed before the end of the 5th day of trading. And if that works here, it's a tendency, it isn't a hard and fast rule. If that works here, we're going to undercut this low before Wednesday's close. We said that this break of the gray trend line wouldn't stick. We've gone over, but once you have a break of the trend line, which is invalid, it's usually followed by, shortly thereafter, by a break of the trend line, which is valid. And that means we're going to go through this line. Now we still have a target of going 300 handles under this red line, which would take us into the 5700s. And if we get a 50%, if we get a standard 38.2% retrace of this rally, that would take us to 57.25 and change. Let's remember that number. Because we rallied to resistance in a straight line, either gap over resistance or resistance wins. If this resistance is going to work, it should be possible to find a wave count which justifies this being the end of the move. Well, we have wave A, we have wave B, we're in wave C, we have an A and half a B. So if B stops here, you want to find a place where blue C of green C has some kind of Fibonacci relationship to blue A of green C. And you also want to find a place where green C has a Fibonacci relationship to green A. So if you take the height of green A and multiply it by a Fibonacci 1.272, you get about 5727. And if you take the height of blue A, multiply it by 1.272, you get pretty close for blue C, 5719, and our 38.2% retrace, 5725. We have a bunch of targets here which are all clustered within a relatively small number of points. And if this does hold, and if we're going to be in blue C, and if blue C of green C bears a relationship to blue C of blue A, we could have a pretty big straight line drop of 200 handles. Now, I think that my rule says that we're going to undercut this by Wednesday. There's a guy on YouTube. You can see how he comes up with these dates. He tells you his method, named Woodson. And apparently his dates are pretty good. Some of his stuff I haven't followed him for that long. I'm just looking at what he says. He has a change in trend on Friday. So if this all works, and if this high holds, and that's a pretty big if, we could have a very big drop before the next week's over. At least it's a favorable risk-reward ratio. You've got a potentially big reward with a very close stop. Now Monday's pattern has the early low regardless of where we open. There's a lower MEJT target. Unless we gap up smartly, the rules call for it to print. The failure of Friday's normally bullish pattern to close near the high is bearish unless we gap and overtake the high a day promptly. Should lead to lower prices, which doesn't guarantee we close lower. There's resistance near the high a day, and the break of the trend line which retrace should be followed by a break which is a valid break. So if Friday's high is not violated significantly, we have wave balance in the 5720s basis cash. Now it's common for the action of the first 2 trading days of the year to be undone before the end of the 5th day of trading, which will be Wednesday. Friday's high is a candidate for the end of the rebound, and bulls need to rally, ideally by gapping over Friday's high, to invalidate the negative implications of the technical picture. Again, it should be the pattern with the early low. If this holds, and that would be a stop, we could drop 200 points before the week's over. We'll have to see if that happens. It's a good risk reward if you want to be short, and that's today's call.